What's good, YouTube? Welcome back to the channel, and today we're talking about Zomedica stock, our favorite pet healthcare company. As you not as you remember, but as you know, they are a company with many pillars, not just truforma, which they were sort of built around, but they also have PulseVet for horses, or equines, I think it's what it's called, Vet Guardian, TrueView, which is their sort of microscopic slide preparation. They have Revo for their comprehensive imaging systems, and they have Assisi Animal Health. Now, this is a company that I know many of you are just watching because maybe you're sick and tired of how long you've been holding Zomedica and you really haven't seen much of it. And you know what? I don't blame you. If we take a look at how Zomedica traded today, it really didn't do that well. I mean, it's up 3%. If you look at it over the week, it's actually down 3%. Look at it over the month, we're down 1.67. Over 6 months, we're down about 23.5%. And year to date, we're up like 29%. But this stock has literally come from the all-time highs back when it was sitting around $2.50 to $3, having pumped up drastically as part of the meme rally. Now, one of the things I always look at, and this is something that you should have a copy of, is the Wall Street cheat sheet, right? This really speaks to sort of the hyper euphoric stages of a rally, whether it's Zomedica, whether it's Bitcoin, Nano Dimensions, maybe even Jewel. And it also speaks to the exact opposite, right? So as you have hyper euphoria, which is really things will keep going up forever, you also have hyper dysphoria, which is things will keep going down, and when things are going up, no, you know what? They're just trying to trick us. It's going to keep going down. And this is literally why the stock market is such, and stock markets and investing in general is such a hard game to play. And that's why many people will always say, hey, look, don't do your own stock picking. Go out there, get a financial advisor, and let them manage your stocks because they take the emotion out of it. They're not affected by it to the same level that you are, right? And that reminds me, if you're new here, make sure you subscribe to the channel. Also, hit the like button. It's very much appreciated. And it tells YouTube and it tells me that you like seeing content like this. That way I'll make more of it, because every video does take me some time to prepare. And also, let's not forget the biggest takeaway. Nothing in this video is financial advice. So please do your own research and your own due diligence. And that way you'll always be happy with the outcome. So if we look at the sort of psychology of a market cycle, what typically happens is you have somebody, and let's just say we're starting at the tail end here. Actually, you know what? Let's go up here to optimism, right? Somebody sort of gets into an asset there. Everyone's talking about how it's going to go to the moon. Everyone's like, oh my God, this rally is real. As it keeps going up, as you see over time, time will move forward as always. Time will always move forward regardless. But here the price is going up. Then your belief, like it's time to fully get invested. And you think that regardless of what the asset is, because you know what? You see the green, you see the constant skyrocketing, and now you're like, oh my God, I don't know why I didn't buy more of it. I only regret not buying more. I'm going to use margin, or in this case, margin is like the credit card version of buying stocks, where you buy stocks and you owe interest. And you're like, oh my God, I'm going to tell everyone. And this is sort of what you have at so many phases. You know, you see a stock, you're up like 40%. You're like, you tell your friends, oh my God, the stock's amazing. You guys should get in before it goes to 100%, before it goes to 200%, right? Then at the euphoria stage, you're like, yo, I'm a genius. I don't need to work this stupid 9 to 5. I'm good. I'm going to retire. I'm just going to rely on my intelligence, which has made me so much money, right? So you have this super euphoria. And when you look back at sort of Zomedica's chart, where can you see this, right? Well, it's definitely not here back in 2019 when Zomedica was 250, but going from over here when Zomedica was sitting at 6.6 cents US, right? It was getting beaten down, and it just went up and up and up and up. And let me say, over here is the euphoric stage where, people were like, oh my God, this is incredible, right? Then you have sort of complacency, which is, the stock sort of retraces, or the assets price retraces, and you're like, we just got to cool off for the next rally, right? And that's really over here. You see it come down. Oh, it's come back up. Don't worry. All's not lost. And then as the stock or the asset keeps going down, you get anxiety. In the case of those who bought on margin, why am I getting margin called? Which means like basically you don't have the necessary collateral to hold the assets anymore because the price is coming down. The dip is taking longer than expected. Your denial, my investments are with great companies, are going to come back. And this is, once again, what we started seeing over here when, Zomedica had dropped from $2.50 to like, $1 to 50 cents. And then coming back here, oh my God, panic. Everyone is selling. I need to get out. I'm getting 100% out of the markets. I can't afford to lose more. And who shorted the market? Why did they allow this to happen? There must be somebody I can legally hold accountable. And that's just sort of this period over here, right? So like, sitting at 15 cents back in December of last year. People are probably like, oh my God, this is the worst. I can't believe I got into this. And now, even though the market may move up slightly over time, people are depressed. My retirement money is lost. How can we pay for all this new stuff? I'm an idiot. And the reality is you went from being a genius at the highs to an idiot at the lows, not thinking about sort of the cyclical nature of the market, right? So what's happened here is really all that's changed is your confidence because of a few green and red candles. Hey Pete, welcome to the channel. Thanks for watching the video. Hope you're having a great weekend. And also for those of you who are watching after the fact, I hope all of you have a fantastic weekend, and I hope that you sort of have some positive news, whether it's in Zomedica or other investments that you're in. So as you can see here, we went from all-time highs down 94%, right? We lost $2.40 on our stock price, 94% decrease in the value of sort of Zomedica asset in this case. And now, every time Zomedica moves up, people say, hey, this is a sucker's rally. And we don't know yet because we really haven't had it. But sort of this is what Zomedica had before too, right? It had some period of euphoria, came crashing all the way down to 6 cents. And as things started going up, oh wait, it's a sucker's rally at the first bit. And the cycle will continue, right? And I'm not saying in general that, these cycles will always happen, but they typically happen for asset classes that are actually very good, right? The feelings appear as the market fluctuates, right? So you have the peak, which is your point of maximum financial risk, which is where people should be selling or taking profits, in my opinion. Then you have the trough, which is like down here, which is the point of maximum financial opportunity. And it's the literal cycle back and forth. And over time, you see assets go up. And let me just open up sort of the Bitcoin chart on the other window so I can sort of show you an example, because this sort of cycle has played out so many times for many of our like favorite stocks or sort of assets. So let's take a sort of zoom out view. Okay. And if you look at sort of Bitcoin over here, Bitcoin had a euphoric stage where it went from like 1,800 all the way to 19,000, back to like 3,000, small bull cycle to 12 or 13,000, back to 4,000, up to 55,000 and down to 15,000. And we're starting to see a sort of kind of move upward. And I'm going to make another video on this, so don't sort of worry about it. But if you strongly believe in something long-term, they really do follow these cycles. Now, one of the things we want to always measure is how are those who are inside the company feeling about it, right? So this was an article back in May of 2023 so just like 2 months ago, CEO Larry Heaton acquires 100K shares of Zomedica stock. So that's like $20,000 basically. Not a huge investment, but hey, it's better than him selling, right? So it's something important. Now, I did promise I will sort of share how I make money in Zomedica, and I will get there very soon. But I just sort of wanted to highlight here that for most people, they're asking, is the market correction over, right? And the reason is, in a bear market, you have like 20% drop from peak value in indexes like the S&P 500. Well, the literal thing is that if we look here, where S&P Jan 3rd of 22 was sitting at 4,800, it then dropped to 3,584. So let's just take a look at what that difference is. So let's do price range here to here. Oh, sorry, I already did this. It's $266 or oh, sorry, that's up here. What am I saying? Why is this not showing? It's basically a 1,300 point drop. What's really important about this is we're only 266 points or 5% away from the all-time high in the S&P 500, right? Once again, cyclical nature, right? Look, came down so much and has almost recovered all its value. And the reason I bring up the S&P 500 and sort of the NASDAQ is just as important is when you look at these, I'm just gonna open the NASDAQ. Sorry. Oh, it's frozen. Okay. I'll just open the NASDAQ here. So you can see here, the NASDAQ is pretty much also close to the all-time highs again, right? And to delete these fib retracements. The reason this is very important, once again, is this gives investor confidence, right? So looking back here at the market correction over, investors are looking for signs that the market is on course for a full recovery. Yeah, there's some tons of issues. There's inflation still under control. We're, close to getting back to where we were. Investors are sort of encouraged to be a little more cautious before they sort of start eeping into all the sort of things that we're so used to seeing. Hey, Pete, studying up for next week. Hey, you know what? That's fantastic news because you know what? Now's the time, right? I know a lot of people just look at the stock market as a way to make fast and easy money, but the reality is you've got to have a plan and you've sort of got to understand everything going on and have more of a long-term horizon. A lot of people, especially this generation, is all about, I need it tomorrow. I need the big win tomorrow. And that's sort of where tons of people ruin themselves. They're like, oh, I want to buy option contracts, which in my opinion, take away your biggest edge, which is the longer time horizon you have, the more time you have for the asset's value to go up. Take a look at some of the biggest companies in the world and think back to if you just bought and hold those companies for the long term. And this is sort of where I see sort of Zomedica as well. Hey, Home, it's been a long time. I'm glad to see you on here. I'm starting to do a lot more videos like I was in the past, especially now that I have StreamYard here that I can actually turn on the camera and just record the video and not just sit there behind something and doing like 4 to 5 hours worth of editing. But it's fantastic to see you. I hope you're doing well. I hope your family's doing well too. So why did I bring this up? Well, the reason I bring this up about sort of the NASDAQ and the S&P 500, I just sort of spoiled what I wanted to show you guys, is really because once investors have confidence in the broader stock market and they see it sort of hitting or even surpassing the previous all-time highs, we're going to start to see inflows into a lot of the mid-cap stocks. Right now, it's the high cap, the blue chip stocks like Apple and Disney that have been doing fantastic. If you don't believe me, take a look at Apple. Apple is actually sitting here at let's just kind of go down here. They've already surpassed their all-time high. Not all-time high. Well, they just beat their all-time high in market cap because they did do a share buyback. But you can see here, back in December, January of 22, over here, we're sitting at 182, and now we're like 100. We were at 195 at one point, 198, right? Tesla stock is a different story. We're almost at all-time highs, but take a look at, they went from $400 down to like 100, and like they went to like basically 300 this week, right? Like 298. So I don't know why I have all this stuff in here. I can delete this. Yeah. Sorry, there's so much charting that goes on. Oh, you know what? This is before the reverse stock split. That's why. So not reverse. When they did a stock split, it sort of didn't take these. But you can see here, right? Cyclical in nature. Tons of people didn't want to buy Tesla down here, but they were much willing to buy it over here, right? Which is why, just look for opportunities. Remember, your point of maximum financial opportunity is when something is at the local bottom. So the reason I bring all this up, right, is we go back to the Zomedica chart, right? Just take a look. If we see like where the local bottom was, it was around 15 cents, right? We then went from 15 cents to like 34, 35 cents. And we've been like around 20 to 22 cents over the last little while, right? The 20 cents, or in this case, 18-cent barrier was actually significant. Now, one of the things I've been sort of preaching is a lot of you will sit there and you'll say, hey, look, let's just use the example of somebody who has 20,000 shares of Zomedica. They'll say, hey, look, I got 20,000 shares of Zomedica. I am just going to sort of sit on my hands, hold pat. I believe in it long term. Replace this with however many shares you have, whether it's 100K, a million shares, 10 million shares, whatever. What I do is I carve out a portion. So that's scenario one, right? So stock's 20 cents, goes to 40 cents, your money's double, but you don't sell anything because you believe it's going to keep going up. Well, what happens is it goes up to 40 cents, it goes back down to 20 cents, your gains are $0. Now imagine another scenario where instead you said, hey, look, I want to also make some money while the stock is moving up and coming back down. So instead you say, hey, the 20,000 shares I have, 10,000 will be for the long term, and the other 10,000 will be what I call swing shares, where you have the shares at 20 cents and you sell some at a higher price, knowing that when the stock comes back down, because it's being so cyclical, you get to buy them back again. So for example, you have 10,000 shares of Zomedica at 20 cents. It goes to 22.5 cents like this week. You sell those 10,000 shares for a 11% profit or $250. And then when the stock comes back to 20 cents, you buy another 10,000 shares at 20 cents. And then potentially, maybe it goes down to 15 cents. You buy like 15,000 shares, knowing full well that when sort of Zomedica sort of goes back up, you can sell these at like maybe 0.2. And over here, that would be, this, this, and it's this times 15,000. And yeah, so basically you sell 15,000 shares times 0.05. Equal sign. And when you do that here, you make $750 off an investment of $2,250. So like, this is sort of why like I talk a lot about not just standing pat. Like, yeah, I believe in standing pat on a certain position of the shares that you hold, but consider also swinging some shares, because otherwise you're just a witness. Otherwise, as this stock goes up and down, you're not really gaining anything, right? Find a way to maneuver, right? Like I said, view it differently. View one bag as like your long-term hold that you're gonna hold until Zomedica goes to $2, $5, $10, whatever it's gonna be. We don't know what that price will be, and that's really fluctuate. The fluctuations really depend on how well the company does in the long term. But in the short term, we all know like you've got to be brain dead at some point. Not saying that you guys are brain dead, but take a look at the volatility, right? Going from 17 or 18 cents up to 41 cents, right? That's a double. When you start doing this stuff, you're fine with the stock trading in the range. A lot of people who have just been sitting here, maybe you bought at 20 cents back in March. You're like, hey, this stock has really done nothing because you've been holding the whole time. But try to sort of think outside the box and see what can you do to be more active in your sort of Zomedica stock. So you're not just like, hey, the stock's just going to keep going up or it's going to go up over the long term. because then you will get bored. You'll look at a different stock that everyone's sort of seeing is going up, and then you're like, maybe I should jump off into that. Like an example stock here is AMC. Where is this? AMC stock had some really good news at the end of day. Let me see if I can grab it. I think I got a notification that, yeah. So let's just look this over here. AMC stock went up to $7, right? I own AMC with an average price of like $4.80 or $4.90, I think. I bought this like, I don't know, a long time ago. But basically, it's up 63%. And you know what? I'm able to hold on to it because I got a portfolio super diversified, and I was swinging shares. Now, I have my long-term AMC holds, and I know it sounds weird to say long-term AMC. That is literally a meme allocation in a different portfolio that I just put like a couple $1,000 there, seeing how cyclical the AMC pump was all the time, because AMC and GME are a little different than the others, right? But my main speculation stocks, as I mentioned, Zomedica, Nano Dimensions, and Marathon Digital Holdings. Do what you can to make money in the interim, right? Like, I'm not telling you to sort of, buy and sell all your Zomedica shares, because whenever I say, hey, take profits, people are like, how can I take profits? I haven't done anything, right? Because if you don't sell some shares at sort of the up, then what happens is when the stock comes down, you're not willing to buy either. When Zomedica's 10 cents, 15 cents, you're like, oh, I got too much Zomedica. Well, maybe if you have too much Zomedica, trim some when the price rallies a tiny bit, and then buy those shares back when it comes down. This is sort of what I've been doing. I am net positive on Zomedica, and I've been sort of net positive on a lot of stocks because I started doing this. If I didn't do this, I would be in the red big, because a lot of these stocks have gone down 90%. That's the only way that I've been able to sort of climb out of this hole, right? In the short term. In the long term, I'm not worried either way. Hey, it's Joe Doug. How's it going? Yeah, here's the Zom drop we were waiting for. Yeah, so I've talked about this sort of in the past. I've sort of alluded to it. I'm just sort of showing and explaining like my thought process, and I think you already follow this, which is great. Exactly, stuff doesn't just always go up. Genius, Mike. Hey, I'm glad you think so, and I'm glad that you find this very helpful. You don't know how much you help me pay the kids' college. And hey, I'm super happy and super pumped to hear that sort of, the things I say are helping you make your decisions, and that, you've done your own research to figure out how you want to go forward with it, and, make the plan that works for you. I have a plan like this for every one of my investments. And, even with Tesla, right? Like before the Tesla earnings this week, I took some profit off the table. Why? I didn't need that many shares. And then because of it, when Tesla went down to 255 this morning, or 256, I was able to buy those shares, which were 295 just 2 days ago that I sold for. So, these are the things that you sort of want to look into doing, because this is how you can actually make long-term wealth. I still believe that buying and holding is a fantastic strategy, and I'm going to cover an approach on how you can do that without sort of selling all your good stuff. Because what typically happens is things will rally a lot, and some people will overdo this approach and they will just sell all their winners. So they cut those early and they let the losers drag on. And you really want to do the opposite. So we'll do that in another video. How's it going, DJ DNA? I hope you enjoyed the video. I hope all of you have found this very helpful. As a reminder, if you want support in the stock market, cryptocurrency, if you're doing trading, anything around like Web3, NFT, GameFi, check out our free public Discord. There's tons of like-minded people there who are willing to help. I'm in there from time to time. I am trying to make a video pretty much every single day to come out here and support. So make sure that if you haven't already, that you please follow us. Follow me on Instagram and on YouTube at The Brown Gent. Subscribe to the channel. Follow me on Twitter at The Brown Gent YT. And once again, thank you so much for watching this video. I hope you guys have a great weekend, and I'll see you in the next video. See ya.